Okay, a little recap of the Friday close. Starting off with the markets that closed at low of day, pretty much. Bearish candles. S&P, look at this. I mean, we opened up, we went higher, and then we just closed at low of day. Bearish engulfing, just what I thought. We should go back to at least test this breakout. And honestly, just looking at these vicious candles we had this week, Wednesday especially, and then today, I think we're going to go right through this support. Well, yeah, if it even acts as support, maybe touch the gap. I don't know, whether it happens on Monday. Point is, I think we're going to have to test this ascending. I think it's just a bit too violent. You can just feel it's a bit different this time. I mean, look, it's only down 0.5%, but still, it's the fact that we closed at low of day, the fact that it ventured high, it was green, by quite a bit, and there you go, closing at low of day. We're not done, and I don't think we're going to go down just a little bit, from 446.8 where we are now to 444. I think we're going to go 440-ish, to test this ascending. And sometimes you overdo it on the way down. We definitely overdid it on the way up. That's the S&P. NASDAQ, just as bad. We're already at support. To be honest, we were at support yesterday. I didn't get to do a video yesterday, but you can see it acted as a support zone. It bounced from there. But look, we're not done. I'm not surprised that we're failing at the first support. We've already lost the ascending. So I think we're going to go lower. Look, I think the S&P is going to have to go lower by quite a bit, however much of a percentage move that is. 1 to 2%, that can be done in one day. NASDAQ, sorry, but all the way back down to 360 or maybe even a little lower. So, and that's significantly more than 2%, I believe. Yeah, not even 4. So definitely doable in one day, yeah, but more like 2 or 3 days. Next week we go lower. So that's what I think. Dow Jones, that might even be the worst looking candle. Um, late pop, but just a little bit too little, too late. And look at that. It tagged resistance and closed at low of day. Obviously, we go lower. Obviously, we're going to test this very clear support zone. Obviously, we could go even lower, but that will take a few more trading days at least. So let's just see how we act at 34,500-ish on the Dow Jones. For me, very clear. All of those are very clear. Russell, my opinion, is outperforming the others, and that's after underperforming for so long. But as the S&P, Nasdaq, and Dow Jones go down to test their horizontal, this one's just going to have to follow suit. So maybe we finally give way and start to go lower. Look, 2% drop down is for me inevitable. So they're all going lower by about 2% or more, I reckon, next week. That's quite simple for me to explain. The banks are still outperforming. I mean, they've been underperforming for a long time, like the Russell, but really dramatically during the financial crisis, and it was a financial crisis, and it's not over. But at the moment, they're pretty resilient. I mean, it's a red day for the XLF, failed to continue the breakout, but still hovering pretty close to the highs, and we haven't lost support yet. We just weren't able to crack resistance. Obviously, with the market going down, you're not really allowed to do that. But look, KBE, KRE, green. They are, I mean, if the markets don't go red on a particular day, and they're holding around where they are now, this will go to 44. So KBE wants to go to 44, in my opinion. But if the market's going to go down 2%, sorry, this thing will have to go back down to 38. That'll take 2 or 3 or 4 trading days. But if the market keeps going down, and I think it will, this has to come back down 38. If we just don't go down in the markets, just have sort of sideways days, this will probably start going to 44. So a lot of relative strength in the KB and the KRE, same thing, right? If we go down across the board, then see you at 44, 45-ish zone. But otherwise, this thing wants to go test 53. So for once, the banks, it's been a couple of days, but the banks are actually still outperforming, which is rare in the last couple of months. Let's look at interest rates. Now, interest rates and the 1 year for me is typically just sideways higher. We had a bit of a red day. Now that's just because interest yields rather have been going up a lot recently. So we've had a bit of a drop day. That's also related to the dollar. We'll check the dollar later. So yeah, I don't think this is going to last, this drop in yields. I think it's just a bit of a flush after some staircase higher. So I do think we're actually going to go back up. But should we continue down, watch this 4.6 on the 2-year. Should act as support. If you start to close below 4.6, then maybe we go back down to the next level. You've got to bear that in mind. I've got to consider that maybe yields have topped. I don't think it's the case, but pretty big red day for yields. Pretty nice day for bonds, therefore. But look, we lost this support, and best thing we can do is probably retest 100 and fail. To be honest, we'll probably fail before 100 on TLT. Probably just under 99, start to roll over. Let's look at the 5-year. Look at that big drop, but still, look how close we were during today, from actually touching the highs, 4.5. So, big drop. But if next week we start to rally back up and staircase up, once you start to take out 4.4, that's it. You're just going to squeeze higher. 10-year, look, it's starting to get stronger already. Yes, it was a red day, minus 3.5% on the yields. That's quite a lot, isn't it? Yeah, but we just broken out. So we're just retesting. Okay, I'm not going to say support is here. Support is, we dipped underneath support, but it's just a big retrace. So this is almost more inevitable in terms of its fate, which is just to go back up to 4.3 and squeeze. So 10-year, big down day, still bullish though on the yields. 30-year, look at that. We made new highs for this area and we tagged resistance 4.35. Yes, we closed red, but 1 or 2 days later, you're testing 4.4. So yields was a big down, relatively down, big down day, but still bullish. I still think yields are going to go higher. It was just a bit of a reprieve. And if we look at the other yields, same sort of thing, all of them are going up. It's just a bit of a red day for yields across the board. Looking at a dollar, which has been going in line with yields, that was red also. And I didn't get to do a video yesterday, but look at the tagging of this resistance. It's absolutely ideal. I mean, if I didn't have this descending, you'd probably wonder why did it just fail there. And yeah, you'd look at the other currencies maybe, but the DXY resistance worked perfectly there. And where are we now? Well, we're at another area which I thought might act as resistance and did for 1 or 2 days, but is it acting as support? Yeah, kind of actually. Look, we dipped below it, but we closed above it. So, this resistance is now acting as support. Let's see what happens next. Let me just move them all in line. I'll delete this now. It's done its job. Yeah, well, actually, let me undo that because if it returns, it'll be the horizontal, see if we take out that high, but at that point, we probably will. That's probably better. Oops. So yeah, for now we're here. To be honest, I don't think we just because we bounced quite a lot here on the dollar. It should have really failed around here. It didn't. You could see there was more to it. And now we've gone all the way here. The fact that we've had such a strong bounce to me suggests we're not really allowed to just go all the way down. You're not really allowed to. It's kind of earned the right to retest this high. Now, it may do it here. It may just curl now and go straight back up. And then at that point, danger, because it's going to look very strong. If you start testing here, you're breaking out the descending. If you start to venture above, like hit 103, you're going to go up here. And at that point, you're looking very strong. Like that chart looks very strong. We've taken out quite a bit of resistance, and now we're testing this area. And for me, the bias would be to the upside. So we have to see when it curls, when it starts to head back up, and how it does straight away, because it can happen in 1 or 2 trading days. Now, if we seem to lose and keep going lower, then I think this zone here, this 101 prior support over here, it should find support and go back up. And again, it's the point where it goes back up. That's when I'm going to be watching like a little hawk, because as soon as we start to breach and close outside of this descending, for me, that suggests we could have a squeeze coming, which fundamentally, I don't think the dollar should do, but technically we've seen a lot of things happen which fundamentally don't make sense, like the stock market rallying. So, it's good to see the resistance working here, but I'm very wary about the curl and bounce back up, because yeah, I just feel like the chart could be very, very strong, very, very quickly. So red day for the dollar, but still technically cautious. Okay, let's look at commodities, which, to be honest, did not have a very strong day despite the dollar being red and yields being red. I mean, look at copper. Okay, not a dramatic down day. It's basically sideways, but sideways down. You'd expect it to be up. It's just popped its head up full. You know, it finally wants to run. Okay, it was muted because the dollar went up. Well, the dollar just went down, so you should, you know, you found an excuse to start testing for again, but it didn't even do that. It didn't even close green. So not the best day for copper, but you know, not that dramatic of a red day. So just sideways down. Natural gas. Again, I didn't get to do a video yesterday, but look, it did exactly what it had to do. I mean, I said this was the worst looking candle so far in this area because look how low we closed, although it was just above 2.5. So it's, you know, tricked a lot of people as it did here. It ventured below 2.5, took out the stops, but it closed just above. And it just had to bounce straight away on that day. And it did. And today continued. So not a massive up day. It doesn't really care about the dollar, in my opinion, but it saved itself from technical disaster down here. So let's see if it can rally, and you know, let's see 2.75. That will probably be resistance. We've seen the last 5 candles fail there. So for me, 2.75, you need to close above that. And once you do 2.9, and then you're hitting your head on this massively important long-term strategic trend line. So, you know, if you can close above that, then you're squeezing by a lot. So I'm still bullish, but you know, obviously I understand that it's possible that it just flushes. But that's why you have to have a plan. You know, have a thesis, have a plan, spread out your buys, your sells, buy on the way down in tranches, spread it out, and do the same on the way up, etc., etc. So nice green day for natural gas, all things considered. Now oil surprises me still. I thought 82, 83 would be the top, and we did touch 83, which so far is acting as resistance. For me, this is the top. You can see why. You know, it's been months that we haven't been able to even touch 84. Today was very good. It's impressive. That's with the markets going down, that oil's been going up. This big red candle here, I thought was the mark of the top. Yes, you could have a little green candle, but I thought we'd roll over. Well, we've had another new high, so very impressive. I think oil has proven itself as not deserving to be in the 60s. I still think it's got to come back down a bit, you know, healthy retest of this middle of the channel, because we're really trading between, let's say, 67 and 83. And yeah, you know, it should be trading around, let's say, 75-ish, you know, the middle of this channel. So, but let's see, we've seen oil do crazy moves before. It could just keep going up. And long term, I'm bullish oil. So it's just sort of short term. I think it's had a nice run. It needs to just relax and find a healthy retracement from which it can then launch back up again. But otherwise, very, very strong, you know. Uranium, also very, very strong. Oil and uranium are the strongest ones out of these 4. And uranium again, okay, it didn't get to close above this 22.6 zone, but you know, it's made back a lot already. And uranium, I don't know, it just feels like it follows the markets a lot, and the markets were red and it was still green. So uranium relatively strong, and I think long term, even medium term, it's going to go up. It's going to go and want to test 24, then we go back down to this 23, and then we retest 24 and we squeeze to 28 or something. So uranium, very nice also. Let's look at gold and silver. Now, they were up, but to be honest, not that impressive, because think about the dollar. It was down quite a bit, right? It was down like 0.6%, or something like that, 0.5, but still pretty decent drop in the dollar. But gold was able to close pretty much around the ascending. So has it reclaimed the ascending? Maybe. So not the best day for gold, but still, you know, it didn't break down yet, down to 1900. Let's just see what happens next week. Very simple. I think it's all about the dollar and yields more than anything else, more than the markets, actually. and yields actually above the dollar. So watch yields, then watch the dollar, then watch everything else. Depends what you're trading. But yeah, maybe you could say that we're back in the ascending. But then again, the ascending becomes resistance and goes back down. Let's just see what happens. Let's not get too excited. Silver did not lose its ascending. It actually bounced quite well off its ascending on this day here. Look at that. That proved it. And then here, okay, went slightly below it, but you can see it's holding the ascending. You know, it's not even just the ascending. It's like, look at the highs over here, you know. So it is support. This range, this big fat blue area here is support. Whether it's the horizontal or the ascending you're going by, it's not just by magic that it's found support here. So I like the support in play. I've got this support on the way down. We're not going to go back down there for at least 2 or 3 days. But let's see what if we can mount a nice reversal. This will not be resistance anymore. Let me just delete that. Yeah, I'll clear up the chart a bit later. But you know, for me, again, we've got to go back up. You've got to reclaim. It's quite hard to tell actually here. Well, let's just do it by units. So, you know, 24. Let's just see if we can close above 24. But I think it's more gold. What can gold do? Where does it find resistance? But that will depend on the dollar and yields. So I'm not even going to watch too much the gold and silver chart. I think we found support. That was quite easy to identify. Gold, we just flushed below support, but we found it again. So let's see. I'm going to be watching the dollar and interest rates actually more than gold and silver itself to judge gold and silver. Let's look at the miners. The miners, I mean, up 1% almost. It's okay. The markets go red. Sometimes they follow the markets, and they did get a bit influenced by the markets. And gold and silver are not up too much. So it makes sense that it wasn't up too much. But, you know, when the dollar's retracing, kind of expect more. For me, this support 30 on the GDX should act as resistance, but I can also see a decent move up because it's come down quite a lot and it deserves to be going up. So I'm not sure how strong resistance will be at 30. It might be some intraday resistance, but then we end up going much higher. So just something to watch. On the way down, well, obviously we've already touched support around, let's say 29. If we start to lose that, then we've got this little gap fill area over here, maybe. And if we lose that, then we've got this last zone over here, very clear support. You can see hitting it here, etc. So 26.5. I don't think we're going to get there for several trading days, so no need to look at that. Let's just look at the ones right in front of us. For me, on the way up, immediately I see 30. After that, well, probably 32, but I doubt we go all the way up to 32. So GDXJ, you know, it's quite interesting. It's found support higher relative to GDX. GDX is testing its June lows. GDXJ is not yet, but you know, not a big difference. So I'll move this around there. So look, here we found support at 35. Very nice. And well, yeah, you can see prior support at 36, which probably equates to GDX's 30. You can see how we're already there, the GXJ, because we're stronger, relative speaking, but that acted as resistance, which makes sense. So 36 acting as resistance, closed at low day, not the best candle at all. So it's really, you know, if you really want to trade it short term, you're looking at these two lines really. You know, you're looking at 35 and 36, so pretty tight stuff. Again, I wouldn't even be watching GDXJ. I mean, I would, obviously. It's just I'd be looking at the yields, maybe even the 30-year, because the longer yields look more sensitive. It looks like they're moving everything. The inversion of the yield curve is well, it's not as strong as it was before because the 10 30 years are going up more than the immediate 1 2 year, but yields are going up. So it's just getting harder and harder, and a fragile market is more likely to crack. So where's the crack going to come from? Are we going to have a bank failure next week or something else, a pension fund or some corporate entity blowing up because of their own debt? It can happen any moment now. But yeah, I'm watching yield and the dollar more than gold, silver, and the miners, even though that's what I'm looking to trade the most. So, but those are the levels I'm watching. It was a green day, but still very, very cautious, not the strongest day. And again, the dollar and yields, what are they going to do next? I'll finish with Bitcoin. Actually, there's no point. There's not much to say about Bitcoin. Sideways day, bit red, bit like the markets, nothing special. It's all about 28,500, which we tagged perfectly. I just see Bitcoin going down with the markets. I think the market's going to go down another 2-3% next week. And I can't see Bitcoin going up during those types of days. I think we're just going to drift lower, close below 28,500, and then have one of those little flushes down to 27,000, something like that. And then you'll have a massive buying candle, as you sometimes do, like one of these. And then it'll probably try and mount another run from this ascending, which I might have to start extending. But I don't think it will succeed there either, because I think the market has found its top. I really do. I think it's just gone up so much, it sucked everyone in, and yeah, the market has a way of doing that, and then it just unloads on you, and you got all these people who just cannot sell, they just refuse, and they get into despair, and I can see one of those sort of moments coming. All right, that'll do. It's like 2 in the morning over here, Friday, so sorry about the late video. Tomorrow, though, I really intend to do a mining video on specific miners and really focus on that section, and maybe hopefully another video after that. Okay, enjoy the weekend otherwise.